Hey, good morning. Let's go over today's trade plan. So in the overnight session, we've seen that the buyers have been in firm control, and for that reason, our short-term bias is neutral to bullish. The bigger picture bias continues to be bearish, but on the smaller time frames, if the market can hold above the 38 high volume node and yesterday's high, and then put in a breakout above the 43.75 to 45.75 zone, we could get a directional move for a test of the 49.5 to 50.5 Friday's high and 59 to 61. Now, in order to get a sustained breakout, we would have to see some pretty decent upside momentum and a stronger, broader market where the advanced decline is actually holding at some decent levels and trending higher. We would have to see a breakout in the Russell as well to really support the market to go higher. But if those conditions are present, from a price action perspective, a break above 43.75 to 45.75 could lead to a move up to the 59 to 61, at which point we can start to see responsive sellers entering the market again. So 59 to 61 and 64 quarter to 66 quarter are areas where we can still get a sell response in alignment with that larger time frame bias, and from there the market can rotate a bit. On the downside, a failure at 38 to 40 quarter would be the first warning sign, and a break below 31 to 33 would be needed to shift the short-term control back to the sell side, or at least break this short-term trend that we've had, and that can lead to a liquidation type move into the gap fill at 25, the overnight low at 22 quarter, and the 18 to 20 support zone. Now 18 to 20, 22 quarter, these are areas where on first test we can get responsive buyers active in the market. Below that we have a important short-term high volume node at 1915, and then better support at 10 to 12. So as the market goes lower, in the event that it goes lower, we would just have to see the level of selling and momentum we were seeing in the market. As long as it was setting up to be a balanced type session and not all out liquidation on strong downside momentum, then we could still get responsive buyers active, especially at the 15 and the 10 to 12 area. But if we're going down where the Russell is completely failing and the advanced decline line is tanking lower and we have sustained downside momentum, then we have to be careful on long setups, even at the support zones below, because there may not be enough reward to risk to really justify getting aggressive. So right now, how the market reacts to 38 to 40 quarter and the initial support and initial resistance zone is really going to determine the short-term bias. Again, we do need that underlying environment to support a sustained upside breakout, but heading into the open, we just have to understand that the buy side has been more dominant. But if there is a lack of strength, so if the market opens, but the AD is trending lower, or there's simply not enough upside momentum, then we can still fail at the initial resistance zone and start to head lower. So we do need that underlying strength to really push the market higher and sustain these higher prices. Otherwise, that larger time frame bias can come back into play. So, for that reason, you can see that, the market is mixed, right? There's this conflict between the smaller time frame and the larger time frame, and depending on how that resolves is really going to help set the trend or the directional bias for the day. If the short-term underlying internals are looking good and there's momentum, then we could go up for a test of 59 to 61. So that's very much within the range potential of the day. But if there's a lack of strength, keep in mind that, up at initial resistance and the resistance zones above, it's not that you're going to see all-out weakness, but simply a lack of upside strength can be a reason to short the market, or at least a reason to be more cautious and look for a failure. So those are really the main thoughts heading into the open. Again, short-term bias is neutral to bullish. Larger time frame bias continues to be bearish. But right now we have to be a little bit more focused on the short-term bias here because the buyers are dominant on the smaller time frames and the market is setting up for a directional move. We just have to see whether the environment really supports the idea of a directional move higher. If it does, then look for a move up to 59.61. Be careful at 49.5 to 50.5. That's a minor area of resistance. So that being said, let's see if the buyers can really continue to maintain control heading into the open, and we'll take it from there.